Are stablecoins soon gonna be illegal? Hey and welcome to today's video. My name is Julian. On my channel, it's all about making you crypto fit. We discuss the beautiful world of blockchain, cryptocurrencies, Bitcoin. Every once in a while, we discuss altcoins and other investment vehicles. And today I want to discuss a topic that's been all over the news lately, especially in crypto news, and that is that the G20 countries have decided or are claiming that stablecoins like Tether and so on might become illegal. And there is a huge misconception in all of this, and I would love to discuss this in today's video. Before we do this, however, do me a quick favor and check out my company called Cake. At Cake, we offer cash flow on your cryptocurrencies, on Bitcoin, Dash, PIVX, and many other coins. We offer the highest interest rates in the entire industry. We do this very transparently so that you can really see where are these returns coming from with the motto, trust but verify. I'll link it up down below. Check it out. It gives you extra cash flow on your crypto. Might be very interesting. So with this, let's go into the video and let's discuss a couple of things here. Now, the very first thing is that stablecoins are not being illegal or they're not being prohibited. What's happening, and actually this has been something that I've been discussing last year already, that stablecoins are probably going to be seen as e-money, as electronic money. And to be fair, this actually makes sense because, I mean, that's what a stablecoin is. And here is actually a huge distinguishment. The stablecoins that are backed one-on-one by fiat. So for example, Tether, it's backed by dollars. So why shouldn't this be e-money? At the end, it does nothing else than actual e-money or just regular fiat. It's just another intermediary there. And so to me, this kind of makes sense. Now, I've been speaking to the regulatory body here in Singapore, especially for my company Cake, and understanding what do we do and how do we kind of position ourselves. And the stance from their side, and obviously this is not an official standpoint, but that's so far what we have been integrating at Cake, at our company so far, is that stablecoins that are algorithmically backed, for example, like DAI, so they don't have a 1-1 fiat backing, they should be fine. But those stablecoins that are backed by a fiat currency directly, those will be considered or might be considered as e-money. Now, going forward, what does this actually mean? Now, this means that probably many exchanges or many platforms are actually going to switch from those fiat-backed cryptocurrency stablecoins to the algorithmically connected or pegged stablecoins, just like DAI and probably many others. That's the very first one, because as an exchange, you either need an e-money license or a license to kind of deal with those stablecoins that will impose completely new regulations, or you just drop those stablecoins. And at the end, if you look at the volume that those exchanges actually have, when you look at Bitcoin, Ether, and so on, most of the trading volume is, not very surprising, from those cryptocurrencies to stablecoins, to fiat. And those stablecoins are just another metric. And so far, those stablecoins have been a bit of a bypass of law when it comes to, well, not needing to deal with fiat itself. So going forward, the things that I see is, well, exchanges drop the fiat-pegged stablecoins. Obviously, interesting is going to be how is Libra going to be seen if it is a basket of different fiat currencies. I would expect this be treated just as if it was backed one-on-one. Exchanges will drop those, or the more regulatory-focused exchanges, maybe Coinbase and many others who use fiat already, might integrate those stablecoins just as they are integrating fiat right now. But those exchanges that don't want to go for those licenses, they will drop them. They will either not offer any stablecoins at all, or they will go for DAI or those other solutions. So personally, I think we're going to see a renaissance of those algorithmic pegged stablecoins, even though they have been slaughtered or they have gotten kind of a lot of hate, especially in the March 12, March 13 sell-off. And Maker has gotten a lawsuit actually from that. So let's see how that turns out. But at the moment, that's kind of what I see here. Now, obviously, the question is, what does this all mean for Bitcoin? Fundamentally speaking, from a value standpoint, and always remember, it's all about price and value, right? Don't confuse those two things. Value-wise, I don't see any change in Bitcoin's value when it comes to stablecoins being regulated or not. It has zero impact on that. Now, obviously, price-wise, it might be that the lower liquidity, less access, being able to trade, this might have a short-term impact on Bitcoin, especially because maybe some exchanges might get into regulatory troubles. There might be limited access for some investors, and obviously this might kind of dampen demand a bit. But long-term speaking, I'm very, very bullish on Bitcoin. I think it's not gonna lose its appeal, and it's gonna be very, very strong. So I wouldn't get too fussy about all of that. You might just get a bit more cautious with certain exchanges where they're not kind of abiding by the regulatory environment. These would be kind of my tips on all of that. So with this, I hope you get some value out of this. If you do, then leave me a like on this video, subscribe to the channel, give me a thumbs up. If you're listening to this on the podcast, then, well, click the subscribe button on the podcast. You're not missing out on any of the key happenings in the crypto market. And one last reminder, check out Cake and get cash flow on your cryptocurrencies. With this, see you next video. Yours truly, Julian.